Today we do the chapter bank reconciliation statement. Okay. This section is section 3, verification of the accounting record. And the chapter 3.3 is a bank reconciliation. There are 3 areas that you need to understand for the topic. Understand the use and the purpose of the bank reconciliation, bank statement, and why we want to do the bank recon. Number 2, update the cash book for the bank charge, bank interest, pay or receive, correction of the error, credit transfer. This is normally happen because that we did not know what is the item going directly to the bank. Therefore, we need to update the cash book. Whereas, next, understand the purpose of any preparation of the bank reconciliation statement to include bank error uncredited. So when we prepare the bank reconciliation statement, we will know that what is the pending that we need to take action after we done the bank reconciliation statement. Okay, the next slide. So go through some definition about the banking system. Bank reconciliation is a process to reconcile or check the differences between bank account and bank statement. This is an action or process. Bank reconciliation statement is a statement prepared by the business to reconcile or check the differences between bank account and bank statement. Bank statement is a copy of the account of the business as is appeared in the book of the bank. Stand from the bank point of view. Bank will treat this customer as a trade payable because when we put money into the bank have the responsibility to pay us back. So that is the reason that they treat customer as a trade payable liability. For the bank account basically is stand from the business point, which is the customer point of view. The bank account is in the cash book is prepared from the viewpoint of the business. The bank is a trade receivable because it's an asset of the business which has deposited the money. Dishonor check. A check that the bank refused to pay. There are many reasons that could be caused the dishonor check. So one of the possible is due to the insufficient fund in the bank account, or maybe there is some wrong information in the check issue, or sometimes also it could be that signature forgot to sign. Okay, no signature, or signature is different with the specimen card. That can cause the bank refuse to pay. Check not presented. Check paid by the business but which has not yet presented to the bank for payment, not yet paid by the bank. Check not yet credited or clear, which is the check banked in by the business but which has not yet paid by the bank to the business, which means that basically if you talk about the cash book, these two cash book already updated, already recorded in the book, but bank statement has not recorded or updated. So that's caused the most of the time in the industry, check not yet presented or check not yet credited is due to the timing difference, that different point of timing difference where the business and the bank do the recording. Standing order, SO, an instruction by a customer to the bank to pay fixed amount at stated date to a named person or firm or business. This key thing of the standing order is that the fixed amount and the date are normally also fixed. Direct debit authority given to the bank to make payment. And this payment made normally is irregular, date and the amount is not fixed. For example, our mobile phone, a lot of time nowadays we do the direct debit. Based on the usage, we instruct the bank to do the payment to the telco company. Standing order, most of the time, we use for the renter because renter is a fixed and the date, payee, all are the fixed. So easier for us to arrange the standing order. Okay, next. Why need to prepare bank reconciliation statement? To show the correct balance on a bank account due to timing differences or error in the cash book. So once we update the cash book, our bank account should be the latest amount. Ensure the correct bank balance is shown in the statement of financial position, because statement of financial position is an important document for the business to make the business decision. So they need to know bank what is the amount in the current asset so that they can make the correct decision. Control the risk of the fraud means that why this control part of is when we do the reconciliation statement, bank reconciliation statement, why this can help to do the control? Because that a person help you to issue a check, could be you hire, so that the person may use your signature, okay, and then issue out a check without your knowing. So this statement, bank reconciliation statement, will help you to reconcile, to double check any fund that misused by the staff. So this is more to an internal check your own staff book. Okay, I did mention about the timing difference. Timing difference is the delay between the item being entered in the cash book and their entry on the bank statement. So that caused the issue of the timing difference. For example, end of the month, you just received the check from customer. Customer pay you end of the month, you go and debit bank, credit the customer. When you go to the bank, you put in the check. Bank would not immediately update the bank statement. They will take 2 to 3 working days to double check, right? Make sure everything in order. Only they will put into your bank account. That caused the different date and different month. So that's why bank statement will not show on the last day that the money that we transfer in or we bank into the bank account. The stage of the bank reconciliation statement. First step, you must compare the bank account in the cash book with the bank statement that you receive. Update the cash book. After we check, we update the cash book and do the correction if any cash book error happened. The balance in the cash book carry down to the following month. Last, we prepare the bank reconciliation statement. This whole process, please refer to the exercise that I'm doing the recording to show you the step how to prepare the process bank reconciliation from the 1 until the 5. Okay. The last, how to present your bank reconciliation statement. Business and the header, bank reconciliation at what date that you are prepared. Balance as per cash book. There are 2 ways to do the bank reconciliation statement. Either you start from the cash book or update the cash book. Add check not yet presented. Check not yet presented, which is a check already updated in the cash book, but not appear in the bank statement. Why we add check not yet presented? Because then from the bank statement point of view, bank have not paid out this money. Therefore, bank statement should have more money compared to the cash book. That's why we add. Whereas next, less check or amount not yet credited. Amount not yet credited means that in the bank statement has not credited. Bank has not put in this money for us. In this case, bank statement should have lesser money. So we less the amount not yet credited. Last, add or less error in the bank statement. So this one, add or less error in the bank statement, we need to see the information in the question, whether the effect, what is the effect on the bank statement, increase or decrease the bank statement amount. So that one, we need to see question. Okay, another way that you can do, which is that if you prefer to start with the bank statement, then you start from the bank statement. But now, this time, when you start from the bank statement, you are actually stand from cash book point of view to do this recording. You add the check not yet credited because bank statement has not updated, but cash book already updated. So cash book should have more money than the bank statement. And we less check not yet presented because cash book already deducted. So cash book should have lesser money compared to the bank statement. Last, add or less error in the bank subject to the question that you have. So that's all for the bank reconciliation statement. So go to the exercise that you have, the topical exercise that I have done for you. Go through it and read it. Then you will have better idea how to do it.